Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here again, the Senior Market Analyst of OANDA Asia Pacific. Very good morning. Today will be the Wednesday, 7th of February 2024. So before we start our Daily Dose, as usual, the disclaimer. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, good. So let us get started over here. So let us kickstart with what happened overnight. Overnight during the US and the European session. So what we could see over here is that number one, the US major stock indices, the European stock indices, as well as the Asia stock indices managed to actually hold on firm. Two reasons actually for that. Number one is we do have a bit of short-term positive feedback loop up from China. Later I'll show you what took shape on China yesterday. And most importantly over here is that we also start to see the dollar strength dissipating at the start of the Asia session yesterday, and that actually also lead to a reduction in the US 10-year Treasury yield, breaching back below 4.15% and back below the 200-day moving average. So that actually reduced the lower cost of funding, given that do not forget that the US 10-year Treasury yield is being used as a proxy for a long-term benchmark cost of funding, and that actually start to see kind of a positive short-term bullish reversal back into the major US stock indices. In the last 2 or 3 days, the one that got the worst hit, which is the Russell 2000, the small caps US stock index, managed to be the top performer yesterday by gaining 0.85%. The SPX, the S&P 500, gained positive 0.2%. Interestingly, there's a bit of profit taking on Nasdaq, because don't forget that Nasdaq was the strong performer on Monday, led by the semiconductor stocks, Nvidia. So Nvidia yesterday did a kind of a minor sell-off that is dragging the Nasdaq 100 down, but not that much, negative 0.2%, because the Nasdaq 100 in the shorter term, the support is still holding. Later I'll share with you all the short-term technical outlook on the Nasdaq 100. The Dow Jones Industrial Average is up by positive 0.3%. Then overall, we start to see also due to this dollar weakness, the dollar index is down negative 0.3%, supported by the dip back below the 200-day moving average on the US 10-year Treasury yield, which also in turn support spot gold as well, XAU/USD, which is up positive 0.3% yesterday, followed by West Texas Oil, which is up 0.9% yesterday as well. All right, so one of the key events, right, that is actually driving indirectly this dollar weakness yesterday was this RBA. So if we call that RBA is Australia Central Bank. So Australia Central Bank had their so-called monetary policy yesterday. So those who actually joined our daily dose outlook yesterday, we do have a mixed technical element on the Aussie dollar. So initially we do have a bearish bias on the Aussie dollar on Monday, but yesterday, because of this mixed element, right before RBA announcement, we flipped to a neutrality stance, because there's a risk of upside coming into play. So that's indeed it takes shape because of RBA kind of a monetary policy guidance reinforce this push up in the Aussie dollar, which also translate to this dollar strength dissipating throughout the session yesterday, stretching from Asia all the way up to the US session. That means, number one, some signs of dollar gain has already been reversed after the very strong non-farm payroll data that was seen on last Friday. So very interesting movement yesterday. So basically, the RBA monetary policy guidance just reinforced this dollar strength dissipation. Okay, so what happened is that because RBA holds interest rate as expected, but their monetary policy statement stressing that they are not confident that inflation growth at this current stage is very likely to meet their 2 to 3% target very soon. And they also do stress that within the CPI component, the services inflation component still remains pretty much elevated. And the key word is that they use could be persistence. And that overall actually imply that there could be still a hike in the option for RBA. All right, so that is quite a big word in terms of the way they want to convey to the market. So that actually kind of put a support on the Aussie dollar to prevent it from further declining yesterday. So what's interesting over here, later I'll share with you the technical chart, is that there's actually one particular bearish element, major one, that has started to get invalidated yesterday. All right, so this is one of the key news event that took shape yesterday. Then one thing I was also to mention over here is something that we got to keep in mind up for in the medium term perspective would be this. All right, so as you all know that those who joined our daily dose earlier last week, we do have this we call it regional banking problem, US regional banking problem back into play again. All right, so what we could see over here in my screen, okay, let me refresh. I think it's okay. Yep. So this NYCB is a New York community bank, extend their losses to double digit. So basically the US regional banks now has started to underperform against the broader S&P 500. All right, given the fact that due to this ongoing real real estate commercial, we call it a risk balance sheet that is inherent in this regional bank. So basically what, in a nutshell, these regional banks lend out to real estate company. Real estate prices in US is not that rosy. The commercial value that is sitting as collateral in the banks side of the story starts to plummet. And also banks that loan out to this, the bank loans to this real estate, commercial estates, property, there's a big risk of these loans turning sour. That means the bank may not able to get back their proceeds in a way directly. Okay, so that causes this ongoing regional banking crisis in US. So right now is that even Janet Yellen has already also made a remark on that. Okay, saying that the Treasury is aware of this ongoing, we call it commercial property, we call it risk inherent in the regional banks balance sheet, and the regulators are on it. Okay, so I do believe that there's going to be some backstop coming into play. Do not forget, previously during last year regional banking crisis in March last year, the US Treasury ignited a emergency banking lending funding program for these banks to draw on the line of the US Treasury. And this then this what I call emergency funding program is ending, has already is due to end next month. It's a 1 year lending program, so perhaps they could extend it again given the current situation right now that some of the regional commercial banks is facing. So I want to share with you that we could actually monitor the sentiment of this we call it regional banks by looking at the US regional banks ETF that I'm going to show you on my screen right now. All right, so let me share with you my screen. Yeah, this is the one. Okay, so in trading view, for those who have trading view, it's free as well. The ticker, you can get a ticker code called KBE. So KBE is actually the SPDR S&P Banks ETF. So it consists of the regional bank as well as the major banks like Wells Fargo, all right, and Bank of America. So what we could see over here is that yesterday it dipped down by negative 0.7%, and this is the sell-off that was seen last week, down negative 4.7%, and now week to date is down negative 2.2%. So what you could see over here, right, very interestingly, is now back to some support level from a technical perspective, the two green line that I draw, all right, which is 43 and 42.75. So given the fact what Janet Yellen has actually said yesterday, if today's the price action starts to form a bullish candle right at this support zone over here, it will be net positive overall on the KBE, which also translate to potentially market participants in terms of sentiment from a technical analysis perspective, there is no signs of what may take shape. I mean, the odds of what going to take shape earlier on in last year March regional banking turmoil, which I show over here in the dotted gray line. So whatever this were to take shape, I mean, if there's a bullish reversal candlestick that's formed today or end of this week, whatever happened in last May, that dip fall over here, the odds might be slimmer, lower. All right, so this from a technical analysis perspective, I share with you that we could actually use the KBE ETF, apply technical analysis to monitor the current sentiment situation that is being inferred on in this ongoing so-called risk of this NYCB bank spilling over to the broader market. Okay, so now straight away, let me jump right now to the short-term technical analysis. So let me share with you. I want to link the dots for you again. So like I said, intermarket relationship is very important to actually analyze or from a technical perspective of what you call it, doing the short-term technical outlook. So let us start with the all-important US 10-year Treasury yield. Okay, so this is okay, give me a minute. Let me share with you. Okay, 10-year Treasury yield. Okay, so the 10-year Treasury yield has a pronounced effect on broader cross asset classes ranging from FX all the way down to the equity market because it's being used as a benchmark for longer cost of funding. Okay, so what we could see over here, right, the 10-year US Treasury yield, yes, you see these two strong push up after exposed FOMC and as well as the strong US job data on last Friday, but it didn't surpass the previous week high on 19th of January, this level. And what it did over here is that it shaped a bearish candlestick and closed back below the 200-day moving average yesterday. So it shaped 6 basis point down, closed at 4.10%, and right now during the Asia session is trading much lower at 4.08%. All right. So the thing about the US Treasury market, right, is not, it's kind of a not really a 24-hour market, but they also operate during the Asia session as well. All right, so it's still open right now. Okay, so what we could see over here, it means that this push up is being negated. So given the bearish reversal candlestick that was seen yesterday, a break below the 200-day moving average, that actually, number one, give us a cap on the last 2 days of dollar strength. So you recall that dollar strength I did mention on Monday, for those who actually follow our daily dose, keep a close eyes watch on the resistance zone of 104.30 and 104.85. These two levels I share on my screen. Why these two levels is important? Graphically, previous congestion level and the 61.8 Fibo retracement of the previous medium-term downtrend of 3rd of October high to 28th of December low. Okay, what it did over here is that prices push up non-farm payroll data due to the strong non-farm payroll data. Then thereafter yesterday, it shaped that bearish reversal candlestick right at this key resistance zone in line with the drop in the US 10-year Treasury yield. So that actually translates to also a positive feedback look back into the Russell 2000, the laggards, and also in the broader US stock market. So in the broader US stock market yesterday, what we could see is a very a healthy movement. Why? Because previously on Monday, the one that is holding the fort to prevent any further sell-off in the S&P and Nasdaq 100 due to a push-up in the 10-year Treasury on Monday was supported by previously positive movement in the mega cap stock. So that's why the Nasdaq 100 was positive on Monday, much more positive on Monday. So what we see over here is a rotation. So we see a profit taking on Nvidia and on some of the mega cap stocks like mega tech stocks, so down by negative 1%. Amazon also was performed very strongly in the last previous two sessions, profit taking down negative 0.7%. But however, the broader market, you see the other stocks in the different sector, actually there's more green than red. So I will say that yesterday movement is rather a healthy rotation. Previously, push up in US Treasury yield supported the stock market didn't sell off. The US stock market didn't sell off as drastically. Why? Because the mega cap stock is supporting it. That means the mega cap tech stock is supporting it, the Nvidia, Meta, Amazon. They were positive, or in fact very positive in the last two sessions. Yesterday, US Treasury yield came down. These stocks rotate out. That means profit taking in these stocks, but back into the other broader US sector or the stocks in the other sector that has more green than red. So I would say this is a healthy rotation. Okay. Now that should actually explain to you guys what happened yesterday overnight, and in terms of linking the dots by the various different kind of we call it key cross assets. Okay, so right now I will straight jump into the short-term technical outlook. All right. So with that, let me expand my screen. All right, so that you guys could see. So now let us start with the FX market first, all right? So on the FX market, right, let us kickstart with the European currency. So European currency, the euro dollar. So euro dollar, if those guys, you join our daily dose of market. So I do encourage you all to join daily. Why? Because it's like kind of follow through. So if you miss one session over here, I mean, you may get a bit of loss. Okay, so don't worry, everything I will look on we call OANDA's Asia Pacific YouTube channel, so you guys can actually take a look back at the recap. So what I could see over here is that the euro dollar managed to actually bounce off from our short-term pivotal support that we highlighted yesterday, 1.0710. So at this 1.0710 level, for sure, this will be a key short-term pivotal support that I will maintain for today to maintain this bullish outlook, short-term bullish outlook on the euro dollar. First resistance to watch will be 1.0795. Above this level, exposes 1.0840, which is also conversing with the 20-day, 200-day moving average, pardon me, and the 20-day moving average as well, and as well as the upper boundary of this minor descending channel that I drew from the high of 11 Jan. Only an hourly close below 1.710 will invalidate this short-term bullish outlook to continue the corrective decline to test the next support at 1.0665. Sterling dollar. So sterling dollar, that means the pound, also continue to inch upwards higher yesterday. So previously we do have this 1.252 figure level as my key short-term pivotal support level. So this 1.25 was actually the medium-term ascending trend line that I drew all the way from the low of 26th of October last year. So what we could see over here is that the price movement on the sterling dollar is much more pronounced than the euro dollar. Why? Because it managed to surpass above or reintegrate back above the 200-day moving average, and now is retesting our first resistance that we highlighted yesterday at 126.10. So we could see is that yes, the RSI is coming very close to the overbought level, but in this meeting of this overbought level, there is no signs of a bearish divergence upon hitting there, or upon going to hit there. That means you need to ask that yes, there could be a potential pullback rather than a minor bearish reversal scenario. So with that, right, I could use a tighten key short-term pivotal support level to potentially maintain this pullback level. So as long as the pullback level didn't surpass below this tighten 1.2550 short-term pivotal support high for today, we also confluence very closely to the 200-day moving average. We will still maintain this short-term bullish bias on the sterling dollar, with the next resistance level to watch will be at 126.70. Minor congestion area over here, like on my screen from 30th of Jan to 1st of February, and that's why conversing with the 50-day and the 20-day moving average. Only an hourly close below 1.255. 125.50 will negate this short-term bullish tone to see a kind of a minor slide to retest 125 figure level. Okay. Asia Pacific currency, let us start with the dollar yen. So dollar yen, within our expectation, it didn't surpass above our key short-term pivotal resistance, which is 180.80 level that is being resistant since the high of 19th of Jan. Tested one time, two time, three time, four time, and it came down over here. Okay, and it sold off yesterday within our expectation. So it's now coming very close to the oversold level. No signs of bullish divergence on the oversold level. So all in all, right, still no change over here. This is the first support level, which is the downside trigger level that we have been highlighting since the start of this week. So these are the two key levels to watch. So as long as 148.80 short-term pivotal resistance holds, still maintain that bearish bias on the dollar yen. A breakdown below 147.85 exposes the next support level at 146.75 slash 146.25. Okay, this zone over here. All right, only an hourly close above 148.80 will invalidate this bearish bias, pardon me, invalidate this bearish bias to see a squeeze up to test the major resistance zone of 150.20/70. So net overall still maintain that short-term bearish bias on the dollar yen as long as 148.80 short-term pivotal resistance is not surpassed to the upside. Then Aussie dollar. So recall that Aussie dollar yesterday we turned neutral at the start of my presentation because of mixed element. So yesterday, due to that a rather hawkish vibe in the latest RBA monetary policy guidance, it surpassed the upper limit of the neutrality level, which is at 65.20. Okay, so why this 65.20 is important in terms of technical analysis. So if we go to the daily chart, we could see much clearer. Okay, so this 65.20 right over here. Okay, so this 65.20 previously is a key support level, and also right the emergence of 65.20, this swing high followed by this. Okay, so let me maybe highlight to you guys this area here, this area, and this whatever area on last Friday. Okay, so those who knows technical analysis, right, they will view this as a very big bearish inverse head and shoulder. And on last Friday, the market broke below this 65.20 level, and it has a follow through on Monday, which is this Monday, because of these technical elements that is emerging, bearish technical head and shoulder. So the key thing over here is that yesterday's price move and today's positive follow through kind of invalidate this bearish head and shoulder formation. So what it means that over here is that it's an invalidated major slash, okay, I'll put the medium term, invalidated medium term bearish head and shoulder formation as seen on the daily chart. It could actually starts to show signs of what I call a failure breakdown below 65.20. So in terms of technical analysis, right, any invalidation of a higher time frame, what I call a bearish chart configuration pattern, it will be deemed as bullish. All right, that's from a technical analysis perspective. So that's why I want to highlight to you all why the 65.20 level is important, because previously it was the neckline support of this medium term bearish head and shoulder formation. It broke down on Friday, and there's a negative follow through on Monday. But however, it was invalidated yesterday by the reinforced by that RBA relatively hawkish monetary policy statement. So a reintegration back above 65.20 is actually deemed as a failure bearish head and shoulder formation, which indirectly translate to a positive bullish bias for the Aussie dollar from a technical analysis perspective. All right. So now back to the hourly chart for the key levels to watch for today in the short term. So given the fact that it has surpassed the 65.20 level, so we will flip to a short-term bullish bias again on the Australia dollar, the Aussie dollar. So using yesterday's swing low area at 64.90 level, this was yesterday's swing low, using yesterday's 64.90 as my key short-term pivotal support level, to flip to a bullish bias. First resistance to watch will be at 65.70, which confluence with the 20 and the 200-day moving average. Only above 65.70 sees the next resistance coming in at 66.20, which is the range resistance that is in place since 25th of January. All right. Only an hourly close below 64.90 will invalidate this Aussie dollar to see another round of we call it a push down to test the next support level at 64.40. Okay, so net given the positive element that has started to re-emerge in the Aussie dollar, so in the short term basis, we'll be flipping to a bullish bias using 64.90 as my key short-term pivotal support level. Okay, so overall, that is what I call on the FX market. That means from a technical analysis perspective, in the short term, we do see dollar weakness coming back into the picture. Major stock indices. So major stock indices, let us start with the Nikkei 225. So on the Nikkei 225, right, we still do have that bearish bias within this range configuration. So using 36,540 as the range top, so that will be the short-term pivotal resistance level. Price action indeed tried to a slight lower during yesterday's US session, and now attempt to actually do a slight recovery. So no change as long as 36,540 short-term pivotal resistance holds. We will still maintain that short-term bearish bias within this range configuration. first support level to watch will be at 35,745. That is being supporting the index since 26th of Jan. Only an hourly close below 25,745 will expose the next support at 35,350, which correspond to the swing low of 17th of January, and as well as the 38.2% FIBO retracement of that previous short-term up move from 4th of Jan to 23rd of Jan. Only an hourly close above 36,540 will invalidate this short-term bearish bias within this range configuration to see a squeeze up to retest the minor swing high of 23rd of Jan, also conversing at the 37,000 psychological level. Hang Seng, which is the Hong Kong 33. So Hong Kong 33, yes, it did that squeeze up, meet that resistance that we highlighted yesterday, which is at 16,300, that swing high area of 25th of Jan and 27th of Jan, and now coming very close to 16,520, 16,725, which is the upper limit of this minor ascending channel that I drew from the low of 22nd of Jan. So all in all, what you could see over here is that there's a reintegration back below the 50-day moving average. So indicating to us that there's some signs of profit taking coming into play back into the Hong Kong 33 market again. So with that, right, I'll be using, rather than using 16,525, I have a bit of excess on the upside. We also correspond to the minor swing high of 4th of Jan and 5th of Jan over here. We could see this very clear swing high area where after that tested this swing high, and that prior sell off took shape previously. Yeah, so this is indeed a key psychological level, now conferencing with another technical element, which is the upper boundary of this ascending channel, and as well as the one-time FIBO extension of this ongoing current counter trend rebound. Okay, one-time FIBO. Okay, can you see here over here? So with that, right, I'll be using 16,725 since there are more elements pointing to this level rather than 16,525. So as long as 16,725 short-term pivotal resistance didn't surpass to the upside, I will flip to a short-term bearish bias right now, looking for a potential profit-taking scenario taking shape on the Hong Kong 33. First support level to watch will be at 15,880, followed by 15,640. These are the two support level to watch for today. We also confluence with the 20-day moving average as well. I think closely at this, I think as a near-term support inside this support zone of 15,800 slash 15,640. Only an hourly close above 16,725 will negate this short-term bearish bias view of that profit-taking scenario to see a further squeeze up towards the next resistance at 17,130, which confluence with the minor swing high of 28th of December and 2nd of January. All right, so net due to its over extreme overbought level in the short term, okay, in the short term, it hit the over extreme overbought level on the hourly RSI, and now hourly RSI will exit from the overbought level, indicating there's a risk of what I call profit-taking activities coming back into play of the Hong Kong 33 after yesterday's strong intraday rebound. All right, so flipping to a bearish bias below 16,725 short-term pivotal resistance for today on the Hong Kong 33. Okay, lastly, German 30. Okay, not lastly, we have the US indices to cover. So German 30 going to pierce up above the range, minor range resistance that is in place since the 30th of January, now turns into a pullback support over here. All right, which is at 17,020. So I don't want to use 17,020 as my key short-term pivotal support for today. Instead, I will use close to yesterday's swing low area. So this was a V-shaped rebound that was since yesterday during the later mid-European session. So with that, right, this will be my, oops, sorry, let me put it in darker color, okay? Okay, so this will be my Titan key short-term pivotal support for today, which is at 16,870. Okay, 16,870 will be my short-term Titan short-term pivotal support level. So this will be no longer the support, the pivotal support. Okay, tidy it up a bit. Okay, so any potential dip as long as 16,870 short-term pivotal support holds, still maintain this short-term bullish outlook on the German 30. Next resistance to watch, 17,130/155. Above it, exposes 17,215. Only an hourly close below 16,870 will negate this bullish tone to see another round of messy, a bit of choppy corrective, minor corrective decline to retest the 20-day moving average, also acting as a support level at 16,795. All right. US indices. So for the US indices, US Wall Street continued to churn higher, managed to trade, tested again, rebound from higher low. All right, but didn't clear above the previous swing high of 38,750. So no change, right? I don't want to put it so tight. Uh, Towards as tight as 38,380, which is the minor ascending channel support right now. Okay, this area here. Okay, I don't put it so tight. So I still maintain this level, 38,200/38,080. So as long as this key short-term pivotal support holds, still maintain that bullish bias on the US Wall Street 30. For sure, first resistance will be 38,750. Above it, sees the next resistance coming in at 38,950/38,970. Only an hourly close below 38,080. This short-term pivotal support over here, which will correspond to the rising 20-day moving average, will kind of negate this bullish tone to see another round of minor corrective decline to retest the minor swing low area of 25th of Jan at 37,800. We also confluence with the previous key range resistance over here. Now turns into a pullback support at 37,800. Okay, Nasdaq 100 lastly. So the Nasdaq 100 continues to churn higher yesterday. Oh, this Wall Street 30. Okay, Nasdaq 100. Okay, so Nasdaq 100 continue to churn higher. So it's a bit of a sideways movement. Still can't break above 17,750. So for sure, this is the first resistance to watch. Yesterday during the European session, it managed to almost hit. Then thereafter, there was this sell-off in the earlier US session due to profit-taking activity in Nvidia and some of the other mega cap tech stocks. But it managed to actually recover much ground towards the end of the US session, which is positive in terms of the price action. So for sure, this 17,365, 360 is still the short-term pivotal support level. I do not want to put it so tight to this level over here, which was supported yesterday. This is too tight, 17,503. So slightly below it, no change. 17,360 is still that short-term pivotal support to maintain this bullish bias on the Nasdaq 100. First resistance for sure, 17,750. Above exposes the next resistance, 18,000/18,030. Only an hourly close below 17,360 will negate this bullish tone to see another round of extension of the minor corrective decline to retest 17,060, which is the lower boundary of this minor ascending channel from the low of October last year. Okay, so that's sum up for the major stock indices. So now let us go to West Texas Oil. So West Texas Oil over here going to rebound as expected, within our expectation after hitting that this ascending trend line support that I drew from the low of 13, minor ascending trend line support that I drew from the low of 13th of December. So what I do over here is that I will tighten it to this Monday swing low, which correspond to this minor ascending channel support, minor ascending trend line support, pardon me, okay, at 7160. So tighten it to 7160. So as long as 7160 short-term pivotal support holds, still maintain that short-term bearish bias on the West Texas Oil. First resistance to watch will be at the 20-day moving average, acting as a resistance as well, which also confluence with the former minor swing high of 2nd of February, 74.20. Above 74.20 exposes the next resistance at 75.75. Only an hourly close below 71.60 will invalidate this short-term bullish bias on West Texas Oil to see another round of choppy minor corrective decline to retest the swing low of 8th of Jan and 17th of Jan, acting as a support zone at 70.50/70.20. All right, then spot gold. So no change. Spot gold yesterday tested our resistance, almost hit 2040 before a bit of profit taking scenario take shape over here. So, but one thing positive is it managed to reintegrate back above the 20 and the 50-day moving average. All right, over here, okay, at 2029. But I don't know, I'm gonna use 2029 as my short-term pivotal support level. So this is like a pullback for this is a support for the pullback. So as long as 2015 short-term pivotal support holds, which correspond to the swing low that managed to help from last Friday's sell-off, and as well as this minor descending trend line in place since 18th of Jan. So as long as 2015 short-term pivotal support holds, still maintain that bullish bias on spot gold XAU/USD above 2040 exposes the range resistance of 2060 that is in place since the high of 5th of Jan. Right, so that's sum up for the short-term technical outlook on the various cross asset classes. So before we go, let's take a look at the economic calendar. What are the key events to look out for today? So for today, throughout the European session will be rather quiet, not much event to look out for. Aspect for the fact that if we come down towards at 10:15 p.m. Singapore time, there's a Bank of England official which a public speech, and also we do have earlier on Thursday 12 a.m. to 1:30 a.m. there is a 3 Federal Reserve officials speaking, Fed Kugler, Fed Collins at 12:30 a.m. Then 1:30 a.m. Thursday time Fed banking speech, and also before our daily dose kickstart on 11 a.m. tomorrow. Thursday night at 9:30 a.m. we have the all important China inflation data, where market is expecting further risk of deflationary risk at negative 0.5% year on year to come in January. So there's some data to watch out for, and followed by factory gate the PPI data as well. Okay, so with that, thank you for your time, and I wish you a great day ahead, and we shall speak again tomorrow. Thank you.